Hi everyone, welcome back. So this is a quick clip that we're going to get into that was from a previous video. But as always, not financial advice, for entertainment only. Do your own research. I'm invested in following coins and companies. And let's get into the clip. Next is going to be Hut 8 here. Hut 8 has also been kind of trending downwards. Stock price isn't really reflecting it. It has a little bit here, but I don't think enough to warrant the price that they are currently getting for it. I think the only thing that's helping them right now is the HODL position. They do have a large HODL position, which I think is what is contributing to the stock price being at where it's at. Otherwise, I think it would have been much lower than where it is right now. Okay. And then they've had issues in the past 6 months that they're trying to deal with. And I'll maybe go into that a little bit here, but here are the highlights right now. So production highlights for March 2023, 131 Bitcoins were generated, resulting in an average production rate of approximately 4.2 Bitcoins per day. 240 Bitcoin of all those produced in February and part of March were sold in March 2023. So they have started selling their HODL position as well. Total Bitcoin balance held in reserve as of March 31st is 9,133. Installed ASIC hash rate capacity at our Alberta facilities was 2.6 exahash at the end of the month. HOT produced 50.38 BTC per exahash efficiency in March. That's on the low end here, obviously, compared to some of the other guys. A couple other things to notice is they talk about the difficulty raise increasing over month, which was about 10.67, which is why they're down about 10% on production. Other highlights. So they began remediation testing at our Drumheller, Alberta site, which continues to be a high priority. Remediation, that's usually when there's a contamination, chemical or something like that. Not sure what's going on there. If anybody knows on that one, let me know. Or point me to an article that talks about this. I haven't heard anything about that, so this is kind of interesting for me. And then, let's see here, down here, while we met key operational milestones in Medicine Hat in March, we continue to be laser focused on two things, said Jimmy Leverton, CEO of Hut 8. The entire management team is committed to both remediating the challenges at our Drumheller site, right? So it's kind of interesting there, and closing the transaction with USBTC, which remains on track. So if you're all for that USBTC transaction, it's looking like it's on track. You're going to be happy about that. I'm not too thrilled about it right now. Don't have enough details on USBTC to see if it is actually a merger of equals for both these guys. It seems like Hut 8 is rescuing USBTC, which, if that's the case, they should be discounted more than Hut 8 is right now. Okay, that's kind of my thoughts on that one. Let's take a look at the numbers that I do have for them. And let's see here, Hut 8 is right there. Okay, so Hut 8 has 234 million shares outstanding. Stock price is $1.67. Market cap is at 390 million right now, which is higher than some of the other companies that have a much higher hash rate and are hashing more and are actually growing. Hut 8, as you can see with their production here, we'll take a look at it here shortly, has been actually coming down here. Current hash rate of about 2.6 exahash. Future hash rate is supposed to be about 3.2. They do have that facility where they shut off the miners because of a dispute with their electrical provider. Those have been moving to Medicine Hat, I believe. So they're trying to get those installed as well. And that's kind of where they are right now. So 78% operational, 26% growth. BTC HODL is 9,113. That's valued at about 256 million right now. I think a lot of that value in their market cap is their HODL position, and that's what's really rescuing there. If you take that out, they would be down to, what would that be? 140 million, which I think is more in line with what their actual production is like right now. Okay, BTC production here. So best month was for them in August. In August, they were still mining Bitcoin and Ethereum at that time. September is when, right around the 13th or the 14th of September is when Ethereum went to proof of stake. That cut a lot of their revenue out. October, you can see, was at 299. Then November, they just kept going down, 238. December was 161, which is, I believe, when November, December timeframe is when their north-based facility, I think it was, that had the dispute with the electricity provider, and that was shut off, basically, the electricity to them, and that's why you saw that big drop. January was a pretty good month for them, 188. February coming down, 156. March coming down again to 131. So not a good trend going forward here for them. They got to get things turned around. BTC per exahash efficiency, you can see here that their best month was in August, 125.81. They fell sharply here in September, 90.2, then went up a little bit in October to 97.37, and then they went down to 72, which was below kind of the average mark where everybody was before that. December was 64, January 75, so that was a pretty good increase there. But then February and March, they've been continuing to come down. I think the average right now is around 80 280 some for some of the other miners that are really well run and efficient. So they're way below that where they should be on that one. Okay, let's see here. As far as revenue is concerned, so 131 Bitcoins generated them about 3.2, 3.3 million in revenue. They did mine actually more in February with the month being shorter with 3.6. And the best month here recently has been probably, in this year, it was January 3.8, but they've been coming down here each month after that. And, excuse me, I do have them selling about 240 Bitcoin, it looks like. Based on what they reported in February, they sold them 188, and then in March, 240 for a total of, it seems like, 300, 422, and they only reported, what did they report selling? Oh, let's see, where was it? 240 produced in February and part of March. Were sold in March. So I have them actually selling more than that based on where they are actually right now with their hodl position. Okay? Excuse me. So that's their hodl there. As far as their production here is concerned, let's see here, March for the miners, we did install these 93 terahash miners here to get them up to the 2.6 exahash that they are at, and also bringing the price a little bit better. But here's the other part of it here. They were actually mining for only 17.5 days in March compared to 19.69 days in February. That's concerning. Not sure what's going on there, that they're basically shutting down for almost half the month compared to other miners as well. So if they were able to mine for the full month, they would have possibly gotten a lot better, almost probably close to 300 Bitcoin if they were at, let me see, I mean, Bitcoin's 100, yeah, so pretty close to 300. They would have been maybe around 250, something like that, but definitely a lot better than where they are right now. So that's concerning there. Okay, and institutions. So here's what we got. A little bit of a decrease here, 166 from 167. And then shares went down a little bit as well to 20.82 million from 20.9 million. Percentage owned went down to 9.43 from 9.46. And then we also have, it looks like one analyst dropped them. So we have one strong buy rating, one buy rating, and two hold ratings, where before we had three hold ratings on them. And then price targets also came down to $3.72 for the high, $2.11 for the average, and $1.12 for the low on that one. Based on what I'm looking at here, on their revenues here, I have them between $2.34 and $3.51 right now. And that's kind of where I think they should be. They're $1.67, so I think they're still undervalued. A lot of the miners are even more undervalued than they are. But based on what they're mining and what they're generating, this is kind of where I see them right now. Given that, well, this is backwards looking. If we're forward looking, the concern is obviously that they're generating less and less Bitcoin each month, so that's concerning. They're also selling Bitcoin that they hodled, which is, for me, that's fine, but for some of you, it might be a little concerning. And then the merger with USBTC, just a lot of unknowns there on that one. So that's a little concerning there as well. Right now, I'd really love to see them buying more miners, buying more facilities, growing. They have the stack to do it. They're not doing it, which I think is a mistake, because we do have the halving event happening in 1 year. And if they're not growing, they're going to be generating less and less Bitcoin. The only thing that can possibly save them is their hodl position in Bitcoin going way up in price. Okay.